You probably need a bit of both. It's pretty clear that the Chinese policymakers need to have a pretty much a broad-based approach to stimulating growth at this point in time. But inevitably, the transmission of that policy easing into the real economy takes some time. So you're not going to see a stabilisation and a rebound in the PMIs or the economic activity data for some time. But ultimately, what you do now in terms of policy will put a floor underneath the momentum of data. But ultimately, one of the softening patches of data across the region has been trade. Particularly Korean export data has been softening quite noticeably, in Taiwanese trade data as well, once you strip out a couple of one-off or timing mismatch effects. So clearly the resolution of the trade disputes with the US is quite important in terms of stabilising trade activity and trade sentiment as well.
Mark, I'm delighted you mentioned that Korean data because we've been so focused on the earnings fundamentals, but many are still nervous over what is happening on the economic front, as you point out. And let's take a closer look at the South Korean market month to date, because it really has suffered the most here among the major Asian markets, off some 13, almost 14% as we speak today for the month of October. Does this look like a buying opportunity from where you stand?
The Korean market has performed poorly for some very fundamental reasons. Corporate earnings revisions have been very poor for Korea, actually poorer than most countries within the Asia region. And on top of that as well, there is a rising risk of policy error. So the Bank of Korea at its previous meeting guided to the possibility of an increase in the interest rate. But actually, as the economy slows, as corporate earnings revisions get worse, then that strikes me as something that would be the opposite of what they need to do. If anything, they need to ease monetary policy to stimulate the economy, but then they feel that their hands are tied by the excess leverage that's built up in the economy, particularly in the housing market. But if you see a tightening financial policy mix on top of a deteriorating corporate picture, then that's going to lead to further underperformance. But what you can say is that on a bottoms-up basis, on a top-down basis, the Korean market is cheap. But you need the forward parts of that valuation complex, the earnings side of things, to stabilise and start improving again. But at the same time, you need the Bank of Korea not to exacerbate the problem.
Speaking of excess leverage, I mean, are there pockets of excess leverage in Asia that you are currently worried about elsewhere, just given the fact that we continue to see a story of dollar strength?
I mean, there's been a lot of leverage that's been built up in terms of hard currency borrowing, and that goes across the whole Asian complex. So corporates borrowing in hard currency because rates were quite favourable and they could extend the maturities. But as the dollar has firmed and as rates have gone up, a lot of those instruments have a floating rate component, and so ultimately the cost of servicing that offshore borrowing is rising, and it's rising also because when you translate that back to home currencies, the size of the debt grows. So corporate leverage in US dollar terms is certainly a systemically concerning picture to watch as we see further monetary policy normalization in the US.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.